Breaking news for every retail investor out there. A major shakeup in the market that demands your immediate attention. Nike's stock just pulled a shocker, plummeting in a way that has investors reeling and analysts scrambling. And Wall Street isn't telling you the full story. They're giving you pieces but not the whole puzzle. Seriously, this is something you need to hear before you make your next move. Before you buy, before you sell, understand what's really happening. Today, Nike shares dropped by nearly 14%. A significant downturn that has wiped out billions in market capitalization. Right after their latest earnings report. The report was supposed to reassure investors, but it did the opposite. Everyone's scrambling to figure out what's going on. The phones are ringing off the hook, and the trading floors are buzzing with speculation. Was it bad guidance, missed sales? Sure, that's what the headlines say. They point to the obvious misses and lowered expectations. But if you stop there, you're missing the real action. You're only seeing the surface of a much more complex situation. Let's break it down. Let's dissect the numbers and look beyond the surface-level explanations. Here's what smart investors are actually watching. The key indicators and underlying trends that truly drive stock performance. And trust me, it goes way deeper than some quarterly numbers. We're talking about shifts in consumer behavior, global economic pressures, and long-term strategic challenges. For starters, the earnings release wasn't just about profit and loss. It was a carefully crafted narrative designed to manage investor expectations. Buried in the fine print, Nike quietly lowered its forecast for next quarter. This is a crucial detail that many casual observers might miss. That's not just a hiccup, it's not a minor setback or a temporary blip on the radar. It's a red flag about consumer demand slowing down, especially in China and North America. These are two of Nike's most important markets. But here's the kicker. The detail that truly explains the market's negative reaction. Inventories are stacking up. Warehouses are overflowing with unsold goods, a clear sign of trouble. Nike has a mountain of unsold shoes and gear, a glut of product that they're struggling to move. And that's squeezing their margins harder than most people realize. They're having to discount heavily to try and clear out the excess inventory. It's a classic warning sign that demand is cooling off faster than expected. Consumers are becoming more cautious with their spending. So, is this a dip to buy, or the start of something much worse? Is this a temporary setback, or a sign of deeper, more systemic problems? Let's look at what the pros are saying. What are the seasoned analysts and experienced investors making of all this? Some analysts have already slashed their price targets, significantly reducing their expectations for Nike's future performance. Warning that Nike could face a multi-quarter reset. They're suggesting that this downturn could last for several quarters, not just a few weeks. Translation? This isn't just a one-off bad day. This isn't just a blip on the radar that will quickly correct itself. It could take months for the company to bounce back if shoppers keep tightening their belts. If consumers continue to cut back on discretionary spending, Nike will struggle to recover. But here's the other side. The counter-argument, the optimistic perspective that shouldn't be ignored. Nike's still got a powerful brand, one of the most recognizable and respected brands in the world. And downturns like this can be a chance for long-term investors to snap up shares at a discount. A chance to buy a great company at a temporarily reduced price. If you believe in the company's ability to adapt and innovate, this might actually be a golden opportunity, a chance to profit from their eventual recovery. But only if you're ready to ride out more turbulence ahead. Be prepared for further volatility and potential price swings. So what's my move? I'm keeping Nike on my watch list. I'm closely monitoring the situation and waiting for more clarity. But I'm not rushing in yet. I'm exercising caution and waiting for more information before making a decision. I want to see how they handle this inventory mess, and if they can turn things around in the next couple of quarters. Their ability to manage inventory and improve profitability will be key. Bottom line, the most important takeaway from this situation. Don't just follow the headlines. Don't blindly accept what you read in the news. Look deeper, pay attention to the details, and always think long-term. Conduct your own research and make informed decisions. Nike's story isn't over, but this chapter could get bumpy. There are likely to be more challenges and uncertainties ahead. If you want more urgent market alerts and breakdowns just like this, make sure to like and subscribe. Stay informed and ahead of the game. I'll keep you ahead of the curve, providing you with the insights and analysis you need to succeed. Stay smart out there, make wise investment decisions and protect your capital.